Welcome back to another episode of the XRP podcast. Today, we're going to be diving in deep with Mikkel. You guys are going to love this conversation. We'll break down the Fed and a whole lot more. But before we get started, I do want to thank our sponsor, and that, of course, is Uphold. You guys know that this is one of the best, if not the best, platform out there for an XRP holder. And the cool thing they've got right now going on is the new card. And this is a debit card. It works in conjunction with Visa, just like anything else. And the nice thing, no credit check, no hit on your credit there. You, of course, get XRP rewards up to 6% during that first 3 months. So there's a big advantage there. Also, it's got some other features on direct deposit. If you're not doing direct deposit in Uphold, you can actually earn stacking yields and bonuses with your XRP. So check that out on direct deposit. As I said, no credit checks. Of course, you can use this anywhere Visa is accepted. One of the best platforms out there. And remember, this is not only good for individuals, but it's also good for enterprises, businesses. So if you're in business and you want to go in that direction, this is the place. Use our link down below. It does help us out, helps the XRP community because we keep producing great content, hopefully, that is out there for you guys. All right, so you guys know we bring in Mr. Mikkel often, and today is no different. We're going to bring him into the show. Mikkel, how are you, man?
Great to be here, doing well, and always happy to be on the show. It's always a blast.
We get going because yesterday was a big situation, man. We had another quarter point comes off, and now we're starting what could be construed as stealth QE. The Fed even mentioned that yesterday. The chair, Al, got into we're going to go ahead and dump $40 billion into the market, even though we only need so much maintenance money to actually work. What was your first reaction to what you heard yesterday?
Yeah, I mean, it seems to me, and I'm sure you have the same impression, is they're kind of just giving what the market is taking in terms of what it expects. I think nothing was surprising about the 25 basis point.
Yeah.
It does show, obviously, they're moving to easing. I think we'd probably be under the same assumption here that they'll keep just trickling it in until they have to maybe do something a little larger. Whether or not they get to that point, I guess we'll see. But it seems to me right now they definitely want to move long-term policy to an easing standpoint. And for me, the really only big switch up here that could happen to really accelerate things would be is if Trump was able one way or another to replace Jerome Powell at the Federal Reserve. I think if that was to happen, you would see someone come in and do a much quicker cutting cycle. But it seems like based off of the current people we have in place, it's going to be a slow cut down as we sort of try to inject more liquidity into the economy and move more into an easing standpoint. I did see they were going to start operations in the T-bill market as well from an easing perspective. So it does seem like they're turning the train around slowly in terms of getting things going back into an easing cycle, which will be very good for the cryptocurrency market, in my opinion. But it doesn't seem like they're in any rush to slam on the gas.
Yeah, yesterday he announced the $40 billion injection. This creates a little bit of excess cash right now because they only needed, I think, $20 billion for maintenance purposes. Many people came out on Twitter and X yesterday basically just saying, hey, this is kind of a stealth QE. They're beginning it. The real question is what is the specific impact on crypto? Because if you look at this, and he even mentioned this yesterday, is that he thinks, or their plan was that they would do this over several months. So I don't know if that means 40 billion per month. I can't imagine that would be the case. But if all of this plays out into the first quarter of next year, what would be your timing on a potential a true QE in 2026, or would it even be in 2026?
Yeah, it's a good question. So if you look at what the cryptocurrency market has done thus far, it's been fairly abnormal. I mean, typically whenever you have a very easy money environment, you see all risk assets and cryptocurrencies into that bucket performing exceptionally well. And that's just because people can't hold money in a T-bill account and get a good return. People tend to extend themselves a little bit further into things that might have a little bit more risk, but potentially more upside because, there's no way I can just hold it here and get 6%. So I think generally it's going to be very positive, and most cryptocurrency cycles have coincided with easier monetary policy. I think
Right.
right now the fundamentals for crypto are so strong in terms of the ETFs, new inflows, larger institutions, people on seeing regulations coming and wanting to front run a lot of that. I think the fundamentals have been so strong. It hasn't mattered that we've been in a very restrictive environment. The market's
Right.
done very well regardless. I almost see this as kind of turbocharging things in terms of price because you're going to be one, not only having this very good change in monetary policy that's been historically very powerful for risk-based assets like crypto. But on top of that, none of the things have changed in terms of the very strong fundamentals from the adoption standpoint. So I
Yeah.
think those two things lining up going into 2026 are going to be very powerful. And I just think how fast it happens all depends on whether or not, one, there's a replacement at the Federal Reserve. I think that would pretty much guarantee this is going to happen a lot quicker than Jerome Powell would do it. Or two, if there's some breaking or snapping or cracking on the back end that says, all right, maybe next time we do a 50 and then a 75.
Yeah, because I think the way that Powell, because I think a lot of people were looking at a hawkish cut and it came in a bit more neutral. And I think his position was that full QE, the Fed's plan at least, is that they're probably not going to go into heavy rate cuts next year if everything lines up. And of course, to your point, we get a new Fed chair. Yeah, that's probably going to supercharge it. But I think the likely outcome for full easing is going to really correlate to two things. One, if the economy cracks, whether we get a creep, which would happen maybe all the way into March, or if we get something like a panic pivot, which would be somewhere maybe in April to June of 26. That's the one that I'm betting on, is that if we get unemployment to 4.8 to 5, that would be a big deal. Or if a major financial institution faces a liquidity crunch, maybe like a repo market seizing up. So
I agree. And one of the
yeah,
funny things is like, I don't even know what to look at for employment numbers anymore. I mean, you're just not releasing things anymore. No one trusts
exactly.
the
There's no
numbers.
data.
It's like, what do we even look at on the employment numbers? Absolutely. You can tell by the pivot. They're clearly looking at something that's slightly problematic or some
Yeah,
crack coming in some way, or
something's
we
got them
wouldn't really be
spooked.
here. Yeah.
Yeah,
Someone spooked.
yeah, something's got them spooked. I guess the real question would be if we see full blown QE, maybe because they're not going to start with it. So if we do see, let's say, a phase 2, which is more of that pivot, if it fails to stop the bleeding, that'll be the question mid next year. If it doesn't work on those initial enticements, then I think they would go into a formal program, which would be somewhere around 120 billion a month of assets, whether it's bonds, mortgage-backed securities, basically just force money into the system.
Yeah. And I think COVID sent a new precedent because I think during that time period,
Exactly.
it was the first time they were actually purchasing net securities. So
Yeah.
they have gone into new extremes of quantitative easing. And, at the end of the day, they're going to be probably a little bit on the later side to it. There always is. And that's normally where you
Yeah.
get that V bottom. It's like, okay, when are they going to
Bingo.
step in? They step in and then boom, we're right back out of the trench. So, it seems like they're ahead of this one, at least starting to crawl in terms of some of this easing. But I just don't think they want to make sure they have the firepower to go in and do a very large piece of stimulus if they need it. And if they
Right.
cut too quickly and take things down to zero right now, what are they going to do if things come out on the other side of that? So I think they're trickling in and sort of just waiting until their hand is forced and they have to go do something.
Okay. So all of that being said, I think we're in agreement that this is probably like a mid 26 thing,
Yeah, I agree.
unless something just seriously breaks. But at the point you're talking about, which is really the issue with what we're going to see from maybe the new Fed, what that might look like, a Fed chair,
Yes.
in terms of the future. So, all right, good enough. Let's get into some other stories here because I wanted to cover a couple other things. One is the slowdown in the market structure. So remember, it was hot and bothered. We were going to have it this year. We were going to get it, man. It's coming in. Typical politicians promise a lot, deliver a little, and in this case, deliver nothing before the end of the year. How on the fence are you about market structure happening in the first 2 months?
So I have two kind of thoughts on this. One, like if you asked me a year ago if we were going to have crypto market structure in like the first 2 years of Trump's presidency, I would
Yeah.
have said no way. Look, I was a fan overall of the switch up of Trump coming in, but I did think a decent amount of what we were seeing was like pondering to the cryptocurrency voter. I just thought, like this is great. It's really good to have this positive development, but how many people in the administration are really going to be pro crypto? And it
Yeah.
seems like a lot. I mean, at the OCC, the SEC, the CFTC, you have all these pro crypto people. So I think things are moving extremely quickly. And, there's always like the way our government works is they're going to be hung up about jamming something next to this bill that they'll fight about for 4 or 5 months. And things will take slightly longer than their over optimistic plans. But the fact that so many people actually care about getting it done lets
Yeah.
me know, like, whether or not this happens in 6 months, a year, 2 months, 2 weeks, like, it doesn't really matter. I didn't, if you asked me a year ago if we were going to have it in the next 4 years, I probably would have said no. So the accelerated timeline's great. I'm seeing a lot of stuff. I mean, I know there was an article released fairly recently that said Cynthia Loomis had slowed down a lot of it or dropped the ball on it.
Yes.
I
Yeah.
do think there's a faction in there that's very like, hey, we want this to only be a Bitcoin thing. We don't want this to be a broader market structure bill. If you look at some of her advisors on the cryptocurrency side, I think they're very
No doubt.
classic Bitcoin maximalist, which I think is terrible and unfortunate that we're in that position to fight for clarity. I don't think that's going to be the prevailing view. I think if you look at people in the administration, they're very neutral and really just
Sure.
want digital assets broadly. So I think we're kind of fighting those two things in terms of why it's delayed. But I think my zoomed out view is still dramatically better than I would have ever expected. And coming out of an administration that wanted to destroy the entire industry, I can
Bingo.
wait a couple extra months for clear rules and regulations.
Yeah, for sure. Well, I mean, it's a big pivot, and I think a lot of people have to remember that we are on, even though things are happening very fast, I would still say this is 1 year. And imagine, I mean, you've had a Bitcoin all-time high, stablecoins are proliferating the world. We've seen a ridiculous amount of ETF traffic that's just exploding. And now you have things like this right here. And that's Bank of America, man. Bank of America now offering a Bitcoin backed credit offering. So this is not going to be long before we see XRP, ETH, and all sorts of other available assets in major banks. What do you make of this? Do you feel like this is going to become a domino effect?
Yeah, it's inevitable. And even kind of merging the last point into this, I'm firmly convinced that if we do pass market infrastructure in the next 3 years, the really funny thing about all of this is we'll be looking back, in my opinion, 10 years from now and saying, the United States got this so right. They were so early. They were one of the first movers, which is sort of funny because we've talked about for so long how slow they've been and how bad a lot of the rollout has been. And I think both can be true.
Yeah.
I think what we're seeing right now is a lot of these financial institutions see the writing on the wall and they don't want to be late to it.
Right.
Go
Right.
look at the market cap of Coinbase in comparison to someone like a Bank of America who have been
Sure.
around forever. There's a huge threat there for these people to have products that people want. And it's been one of my biggest points consistently to people. It doesn't matter really at the end of the day, in my opinion, how much pushback there is. There's a ton of pushback for the internet. What's people not going to use the internet because there's pushback? The technology is just way too powerful. These things are going to be adopted. And what you're seeing with this Bank of America thing is they see the writing on the wall. They're going to have to continue to stay competitive because the
Mhm.
market is moving to places where the market can be most efficient and people can get the most reward. And if these legacy institutions, they can push back as much as they want, but that doesn't look so great when you're suddenly a 100, 200-year financial institution and this company that IPO'd 2 years ago is close to closing in on your market cap. Those are sort of where it becomes an issue of like, okay, well, we can't afford to say no anymore because the market is dictating there's value here and we're ignoring it. Van Eck, perfect example. Was it Van
Yeah.
Eck?
Good example.
Vanguard
Vanguard. Yeah.
ushering in the ETFs to their platform.
Well,
Perfect
jumping in, I
example.
mean, you even had BlackRock coming in. Obviously, remember Larry Fink was not a big fan of crypto in general. He flipped his tune. And then obviously now Vanguard. But the leaders out there, I think, are still going to be revealed in terms of what banks really lead the way. And that's the thing that, of course, Ripple could get in the middle of with their, with their banking license and make it a little bit more sticky. And I think when you look at also what's happening with RLUSD and stablecoins in general, just stablecoins in general, the idea behind where all of this is going is pretty significant because you've got China over here hoarding gold. I just saw another big number on it today. I just tweeted out about this is that China is going the route of the gold security, mainly to keep from the US sanctioning them and pulling a Russia on them where they seize assets. But
Boom, you're frozen.
yep, done. But you look at that and then you compare to this distinct move from the US, and this might be why we're seeing the all of a sudden move, on in DC, is all of it's boiling down to what's happening right now with the global finance system. And I think that factors in because remember, the United States, they would still like to control. The one thing they have not been able to I think really control has been the euro dollar. This would do it if they get stablecoins really transplanted. What do you think the big strategy is here for stablecoins?
Yeah, I think twofold. I mean, one, it's so obvious. Like the reason why, in my opinion, like people always say the United States got rid of their manufacturing base, and that's of course true. And there's huge issues with that. And we kind of put that offshore. But the reason the United States is in the place I think it is today is because we dominated the internet. We won the internet
Yeah,
industry,
exactly.
and that
Yeah.
had multiples at 100x what a lot of these manufacturing things that dominated the industry before. And I think enough people in the government realize like we cannot lose the internet of money. Like we cannot
Bingo.
afford for that to happen somewhere else. And it got to this point, I think, where even though a lot of people, in my opinion, in the government don't necessarily, some obviously do, but a lot of them don't understand it, they're starting to grasp enough that there is a ton of value here. And regardless if they understand it or not, they cannot afford to let this go happen somewhere else because that's
Yeah.
why the United States is where it is right now. Yes, we don't have the same manufacturing that we used to have, but we have this incredible software and tech that is dominating and eating the entire world. And we would not be looking at the same United States right now if we did not dominate that industry and be one of the first movers. So allowing that innovation to happen in the United States and having that level of control over those companies, or even in comparison to the United States to someone like China, even like that lack of control, having that in the United States is going to allow this innovation, in my opinion, to really prosper and bring a lot of jobs, a lot of wealth, and a lot of
Yeah.
the most important infrastructure to the United States for this global financial system. Stablecoins are a perfect example. I mean, we
Well,
don't
they're
want a
gonna.
situation where the most dominant stablecoin is not a US dollar.
Well, the key there will be is that the US dollar obviously is the most dominant. I think it's 99% of stablecoins still US dollar based. This privatized idea for demand for US debt, because this is a big deal. If you think of Circle Tether, RLUSD, BYUSD, I mean, you could just name them all in terms of going after these short-term US Treasury bills. This, of course, changes a whole concept of how the US could take on the euro dollar in really more of a battle of systems. Because remember, euro dollars are still quite a bit dominant when you think about, especially within Swift. But if you look at a new system now, this could be the way. It's almost as if the bank or the US could have. I mean, you think about it this way. I mean, in the past, it's mostly been through our three-letter security agencies that you go in and create instability in countries. Now, you just need to make a stablecoin available because it takes and drives that currency down to nothing. So they end up in the U.S. ecosystem. I don't see how this is not going to make. It's just like you mentioned earlier. This is like the U.S. winning the internet war again,
Yeah,
but only
and I
with
think it's one of the
finance.
most important things for the United States to finally see something from their side that they're just like, "Oh, this is great." For
Yeah,
the longest time, it was all these use cases for crypto, but how many of it was really important from the United States perspective? It's kind of like one of those things where they're like, wait, this is doing this?
yeah,
Oh, well, we need stablecoin, like we need this. And then I think that's the pathway where unlocks a lot more from the government to say, what else can we do? They
yeah.
needed something to really grab onto and pull them in. And they see this huge use case for distributing government debt through stablecoins and how anyone with a phone or an internet connection can suddenly come in and buy these things and how powerful that is. And I think that will only escalate. I think this kind of opened up the doors to them saying,
Yeah.
wait, there's more we can do here.
How do you think? Okay, so many people are saying, well, there's the surveillance and the sanction problem that we've already run into, obviously, and we did it through Swift. But this would change it because now the US could blacklist, certain wallet addresses. They could also force issuers in some way, especially Tether and Circle. I don't know, because they're getting awful close to freeze funds. And I wonder if this gives the US kind of a kill switch, which is one thing they could not do with the Eurodollar because it was very opaque. Whether it's London or Singapore, they were unable to do that. Do you think that is kind of the end game here for why the US is trying to go this direction?
I do think that that is a part of it. I think it's a nice to have in terms of like, once again, another really good example of why they would want the most powerful stablecoin companies in the world built in the United States, right?
Built here, yeah.
You would
Right.
want at least the option if you were the United States to have that control based off historically how the United States operates, right? I mean, you would rather do that than have the largest stablecoin issuer in the world be in a jurisdiction where they're not going to
No
listen to
doubt.
anything the United States says. That would be a huge problem for the United States. So
Yeah.
I absolutely think that's part of it. And I think it's just really opening up like this idea of what's possible in an internet of value. And obviously, there's limitations and downsides to that as well. But the nice thing about this technology is I think there's going to be counteracting mechanisms. Like I do think at one point in the future,
Huge.
there will be a fully decentralized dollar denominated unit or a peg out there that offers a completely different value proposition. Will
It's gonna
banks
be
interact
nuts.
with it? Probably not. But will it
Yeah.
open up new ways to interact with value? Absolutely. So there's going to be regulated sides of this with controls and permissions that some people hate. There's going to be less regulated sides. That's what you get with the internet. That's why right now on the internet, you have your normal Google user who will go in there and be perfectly happy and get everything they need. But there's other ways you can do different searches and get no ads and reach different parts of the internet that aren't as accessible. That's the way the internet was built. And I don't think it's one size fits all. A lot of people get very sucked into like, well, I don't want the government to have that control over USDC. I think there's going to be plenty of options outside of that. But for me, I don't care. Everything
Yeah.
it should be totally fine for me to interact with USDC.
Well, I mean, in reality, I think DeFi might be the saving grace here. So it's going to be interesting to see how that works in conjunction with the new market structure. Because, this is still kind of on the fence as to how they're trying to work around what the DeFi rules potentially would be. Because there is no rules. There's no
No,
rules.
no, no.
Yeah.
And to a certain degree, like it's going to be a tough balance. And I remember I forgot who said it, but we're probably going to dislike a lot of what they do. But
Mhm.
at the end of the day, there just has to be some level of progress here in terms of institutionalizing things. And if that means your favorite DeFi protocol today isn't your favorite DeFi protocol tomorrow, there's always going to be
Yeah.
someone else stepping into the market, and there's probably going to be someone who doesn't care about those
The market
institutional partners.
speaks.
That's the best thing about an
No doubt.
open, decentralized free market. As long as there's a value proposition there, there's going to be someone meeting and filling that value proposition. The players will change, the protocols will change, but the
Mhm.
technology itself, it's completely different from today where you just get the door slammed on you and suddenly no
Yep.
bank account for you.
Yeah. Well, it reminds me a lot of podcasting. Okay. Because if you look at RSS, which is the tech that runs it, anybody can, host your own podcast. You never have the fear of demonetization. You never have the fear of blacklisting or shadow banning or all those kind of things. If you can create the audience, which is how these networks work, is through Moore's law. It's basically just a cause and effect growth. There's an opportunity there. So it has a lot of similarities to that.
It
One
does.
other thing I want to hit on, Congress just now put out a note to the SEC chair. Let me bring it up here. I'm sharing the Twitter statement right here. So basically what they said is 9 trillion in retirement accounts they're trying to get access to. So they're asking Chair Atkins to basically allow Bitcoin and crypto. So you can imagine XRP, especially with ETFs starting to roll in, as an opportunity here. You think that Atkins will do this? Just automatically say, hey, at a pen, we're going to just allow this.
I don't know if he's just going to go in and like if there's going to be rules around it, but
Yeah.
Atkins, from my perspective, so far seems like a very pro free markets kind of
Yeah,
guy. Like
very
he
much.
hasn't come in, and I think his general philosophy is the less regulations, the more efficient capital moves and the more high quality opportunities that come around for it. So I don't think it will be purely rubber stamped. There will probably be a couple rules and guidelines
Mhm.
associated with sort of what's allowed to be put in there. I would think, but overall, I don't think Paul Adkins strikes me as a guy who you're going to probably like 90% of it, and 10% might be some regulatory burden that we don't love. But I do think it will probably be approved fairly quickly. I mean, as fast as the
Interesting.
SEC can move, which is, like I talked about before, way faster than I would have ever imagined, but still slower than what some people want to see on a week to week basis.
Hey, listen, we could still have Gensler in there, okay?
That
Just
exactly.
think that way. You could still have Gensler in there. And I'm telling you, he's working his way back. I don't know if you've been watching some of the interviews he's doing, which are stupid, but most of the time, I don't know who's media training this guy anymore, but he needs one. Hey, we got other news out there, and of course, that is XRP, another XRP ETF approved. So CBOE greenlit 21 shares under the tag Toxer, TOXR. So this is now out there, man. And we get ETFs flying up the charts here. Even Brad was impressed with the fact that we moved to $1 billion like in 17 days or something. What do you think the long term is for this, for ETFs? Because this is the gateway for regular investors.
Yeah, I mean, if we keep on going at this pace, we're going to have 10 billion XRP in these ETFs in a year's time from now. It's incredible, huge buy demand. And then it's opening up so many pathways. Like there was a lot of debates I feel like I was part of where everyone was like, oh, well, if they wanted it, they would have just bought it already. Clearly not. This is clearly making it really easy for people to get access to it. And it's almost like you're trying to fill a bucket and you just got this massive hose and you're going to throw that massive hose in it that wasn't there before. It's just a whole new pipeline, a whole new liquidity stream. It's only beneficial in my eyes. And I just think this is like one of those things of a market maturing and opening up more pathways and more volume. I do think all these companies are missing a huge opportunity on the ticker ZERP. So some of these I think are a bit out there. I think XRP ticker, XRP, over the long run is probably going to do the best. From my own experience with humans, there's such a human psychology to this thing. And
Exactly.
the XRP ticker is huge. People are just going to go into their brokerage and type in XRP. I don't know how many people are going to get to Toxer, but at the end of the day, I don't think that's really the thing that matters here. Institutions have an incentive and an internal compliance rationale in terms of being able to market, being able to push certain products, being able to advise on them. And this is all just massive positive catalysts in all of those directions.
Yeah. Well, and it goes back to the whole point of where the market is right now. The Fed cuts yesterday and Bitcoin goes up for a minute and then crashes. XRP goes up for a minute, then crashes. So it is an interesting cycle that we're in right now, which makes me feel as though do you feel that we are fully in a bear cycle right now?
No. Like if you draw a line across XRP from where it spiked up in the late part of 2024 to where we are now, I mean, we essentially blasted up, hit an accumulation range and have been trading up and down.
Yes.
I always talk about it, and I know you've seen it. I don't know how many of the viewers have seen it, but when you turn on a microphone and you have that dead noise in the room and it looks like there's these huge fluctuations and then someone talks and you have this huge spike and everything's on a new level afterwards. That's what I look at what we're going through right now. You're always going to have that noise and chop at each accumulation level, but it's the big systematic changes that really change the magnitude that we're looking at on these price charts. And I just don't see it. Like I think we're past the point in crypto markets, and these are famous last words because I know it's been said a million times, but we're going to get to a cycle where it's not this magic 4-year, hey, assets go up, assets go down. My dad asked me about the 4-year cycle, if he's timing up the 4-year cycle at this point. I'm generally worried if there's still a 4-year cycle. I do think it's going to be a lot more fundamentally driven catalyst. Look at XRP compared to a lot of the other altcoins. XRP is up huge over the past year and a half. A lot of things have barely moved. Clearly, things are moving in different cycles. And it just seems like to me, the market is starting to understand a difference in value versus an overall market trend.
Well, and I think that's the point right there. You hit it, is that the market is expecting a different kind of performance now, which has gone back to the point of some people saying, well, yeah, we're completely out of the 4-year cycle. Things are going to be completely different now going forward. So just get ready. It's over. And it's going to behave basically like what we've been seeing with what's happening on Wall Street, which is ETFs, institutional capital, banks starting to move in. And eventually, I'm just thinking, because you have to think about what the early adopter phase was for crypto and how big was that pie. Because now I feel like we are outside of it. It may have only been, a couple of million users that were truly the early adopters, the crypto natives, as we call them. Because I know for us, our channel is getting so many new viewers, but these are not crypto people. These are people coming in from TradFi that are trying to learn about crypto for the first time. So I
Oh,
just wonder how
absolutely.
much is coming there.
We made this point the last time I was on the show, but I don't think those people coming in today are going to have the same values and the same investment
Exactly.
theses of the people of the past. I think the vast majority of educated, sophisticated investors I talk to on a daily basis, they don't make decisions based off of really ethos and how they feel about, like, they like to see concrete use cases,
Yes.
distributed
Utility,
technology,
baby.
something that makes
Utility.
sense. And I don't think a lot of people are appreciating how things are going to change in terms of these new participants coming into the market.
Yeah, no doubt. Hey, Ripple ended up dropping this. They unleashed the Ledger, XRP Ledger V3. So this is a big jump. I don't know if you followed it much, but essentially they're moving, XRPL from a payment highway to more of I feel like a financial superhighway. And with all of the things that they've done here, one, they're going to strengthen the core, which is the AMM and the escrow. This is going to be a big deal. The update, I think it fixed a couple of inconsistencies in how the ledger handled data for escrows, which are conditional payments, and then also the automated market makers, which is good. The reason this matters, let me ask you, because for big banks, institutions to use XRPL, especially for DeFi, this would be the kind of thing that has to happen. So fixing this ensures that this is going to make its way into major banks. Do you think this was Ripple just saying, hey, we know where the problems are and here is the fix, because timing is everything?
I think it has to do with a lot with two things. One, like any piece of software, like updates and upgrades are going to happen, especially as new protocols emerge and there's new insights. Like, it's honestly one of my favorite thing about XRP. Like, the XRP I bought in 2017, 2016 is completely different XRP from XRP today. I mean, these things are just getting more and more powerful, new feature sets that XRP is getting better and better over time, which is really cool, I think, from an investment perspective. The other thing I think that a lot of people forget about in terms of the narrative is you can actually go watch interviews of Chris Larson talking about what the XRP ledger he thought would be used for as early as 2013. And one of the things that's consistently there is the capability of issuing assets and XRP being the liquidity. I think a lot of people look at Ripple's use case for XRP and cross-border payments kind of like Amazon was a book company. Like, yes,
Okay.
Amazon wanted to prove to the market that this new technology was going to be really useful and people were going to like it. But Amazon's overall goal was never to become the world's biggest book company. They were to become the world's biggest e-commerce company.
Bingo.
And I think Ripple wanted to prove settlement with XRP via payments, but their goal is not to be a cross-border payments company. It's to be a settlement infrastructure company, which goes into the derivatives, treasuries, payments, FX, and all these different things. And I just think you're going to start to see, as the emergence of these markets open up, for infrastructure coming to the XRP ledger to position XRP as that underlying liquidity rather than just payments back and forth.
Yeah. Well, and the other thing that plays into this, because this is the area that, I've had Phil and Dom on before from EZA, and, these guys, I would say, are one of the premier developer houses out there in terms of bringing in devs and understanding that. But there is a new feature now in this 3.0. It's called Simulate API. So it's going to give any developers out there the full ability to run basically a dry run on transactions. So that in itself, I think, it's been needed for a while, but the fact that it's there now, this will be huge. So that means institutions could run this for DeFi, for like high frequency traders, bots, all sorts of things could be played into this in the future. So big deal. Other things that they had launched, the idea of scalability for future growth. This was kind of the utility side, which is going toward lending and real world assets, how that's going to play into it. So I'm intrigued that this could open up a lot more opportunities for the ledger, for sure.
No, I completely agree. And just one of the most important things, this is why, in my opinion, the XRP community side is so powerful. The more people interested, promoting, talking, educating XRP, the more smart people that hear about it, the more smart people that then want to go interact with these things and request these feature sets so they can build their own applications. It's something that can't be replicated. In my opinion, there are a lot of chains out there that have a very unsticky base to them. And it's like, well, this is popular here. And then when this next thing comes in, we'll go over here. That's not the case with XRP. It's very
Yeah.
clearly different, and it's a huge, huge value add having that sticky user.
Well, and to your point, because this is a thing that we've mentioned often here, is that the kind of audience that XRP represents for crypto, when you think about how something grows through word of mouth, you look at Bitcoiners who are constantly bad mouthing everything else. Okay. You look at Ethereum maxis, they basically inundate you with technology jargon, and these are not things that translate to growth in a community. But you look at XRP holders and XRP people, it is a different breed, and you can know it. You see the growth in it. And I've already started to see this in some of the private, seminars we're doing when we start bringing up XRP. Now it feels like it's an XRP conference every time I go in there because they're asking us so many questions about it.
That's so funny. I totally agree. I mean, it's almost like in the Bitcoin community, if you don't adopt that ethos, then you shouldn't be part of that community. Like if you don't
Exactly.
think the same
You're
exact way,
ostracized. Yeah.
yeah, if you don't think the same exact way everyone else thought in 2013, like you're wrong, we don't want you.
Yep.
Ethereum, like I don't even. It's an interesting community. I don't have too much to say on that side. But the thing that's so cool about the XRP community is you have these people who are interested in finance. You have these people
Yep.
who are interested on the regulatory side. You have these people who are interested in more retail things, more institutional things. But you overall just have a lot of people who see this bigger picture of a new financial piece of
Bingo.
technology that
Yep.
can be immensely useful. And it's that usefulness, it's that overall vision of understanding what the current system lacks and how this can come in and replace it. On the Ethereum side, it's just so much stuff of like, oh, well, it could do this, this, and this. And you're like, wait, is this even a problem here? Or like, what does this
Yeah.
really add? And then there's these problems on the tech side. So it's just been one of those things that have created a very, very strong community. And I'm yet to see a single, in my personal opinion, investment or investment crowd that hasn't gravitated and done a very similar thing to what we see in XRP, whether that's Apple, Amazon, Tesla, Palantir. You have these groups of intelligent people who surround this technology and get
Yep.
very stuck to it, almost in a cult-like way, but saying cult in like the best possible thing. It's these enthusiasts who all share their knowledge and can gather and create a community to educate and spread the word. And it's such a positive thing to see. It's a continuous thing I see with almost all great investments out there. And a lot of those people are ostracized by other groups. Like if you even look at the early Tesla community, a lot of these people were called crazy
Same
for
way.
thinking these
Yeah.
things can happen, and it was unrealistic, and Tesla stock could never reach these prices. But you just found out later on, no, it was just a very smart group of people who saw this big change and were willing to accept this big change happening to the planet, while the most people, it was too big thinking for them to fully accept. And I just think I so much rather see all these smart people talking about these possibilities than moving into an asset or into an investment. And I'm like the only one there trying to find other smart people who think like me.
Yeah. Well, and it's to your point, and this goes back to what I'm getting at, is that when we analyze audience and where new business is coming from in the industry, clearly the ETFs have kind of shown a glimpse of the fact that it's not only institutional, it's normal retail that are either high net worth individuals, business owners, et cetera, that have started to navigate into assets that have utility. And they're starting to come over from TradFi. And I still believe that, we analyze all the crypto channels out there. All of those channels have kind of hit a plateau, and they've kind of just stayed there. And I believe there is a fixed pie of the crypto bros, but there is an unlimited pie of traditional finance people that are learning about crypto for the first time. So
Go ask
huge.
the crypto bros where else they invest outside of crypto. It's almost nowhere. It's
Yep.
not the same group of people. These are people who have never been introduced to traditional markets, have a completely different ethos, and that's great. Like, don't get me wrong, having new people get experience and learning about markets is awesome.
Good.
But I think it's a much smaller piece of the pie
It
than
is.
the
Yeah.
total value. And people who understand markets and have been investing their entire lives and control large amounts of money, their philosophy and ethos doesn't change based off an asset class. Their philosophy and
thinking.
ethos stays the same. They're not going to walk into crypto, scrub everything they know, and say, okay, time to start doing things different. Those
Kill
group of
it.
people didn't invest in GME and AMC and those momentum things to a very large degree. It's not their way of thinking.
Right.
They prefer to do something where they can look at cash flows and partnerships and network effects. And I think those same things are going to take place in the cryptocurrency world because they're not going to change their evaluation model.
No doubt about it. And we're living proof of it. This channel has exploded in just a short period of time because of the fact that, one, we're talking to a whole new set of investors out there. Welcome in to the show. Mickles has joined us here. He's almost a regular now on the show. So we love to have him back all the time. You guys make sure and follow Mickle over on YouTube. I'll drop a link in the description to get to his channel and check him out over there because he does some good stuff at that. But Mickle, thanks for coming in today.
Always a blast. Thanks for having me.
You bet. You guys know what to do. Like, subscribe, share this with someone out there that is starting to experiment or understand what's happening in the world of crypto. I think this is the place for you. All you have to do is do that. And that's all we ask of you guys. We'll catch you later right here on the XRP Pod. Take care.